Hello everyone, welcome to the last part of our 3-series videos on secret indicators. Today we're going to talk about market relationships and the importance of this tool to have in your trading toolkit. I can tell you this much, professional traders all rely on market relationships as part of their strategy, as part of their analysis, execution, and as part of their reasoning, logic, and rationale to get into and out of trades. I'm going to explain to you why they're powerful, how to use them, and how to build these charts on TradingView for yourself. Before we begin, I want to say that the information in this presentation is for educational purposes. It does not constitute investment advice. The risk of trading in security markets can be substantial. You should carefully consider if engaging in such activities suitable to your own financial situation. TradePro Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. So what is a market relationship? Back in the day when traders traded on the floor, it was a live floor, it was a pit, it was a circle, and they had steps around the circle. They would signal what they wanted to buy with their hands. This was a language that was called ARB, A-R-B, and through ARB they would indicate what they wanted to buy and sell. On the top here of the pits, they would have massive quote boards or monitors. And guess what they showed? They didn't show head and shoulder patterns, they didn't show double tops, they didn't show triple tops, moving averages, they didn't show RSI, MACD, any of that. What they showed were raw price. And these prices would begin to exhibit behaviors and characteristics. For example, the traditional market relationship or correlation is strong bonds means that there's weaker equity prices. Why? Well, we have an entire lesson on this in our member area. If you're an Earn Package subscriber, you get access to all of this information in full, how to use market relationships in more depth, and specific trading plans with checklists on when to enter a trade, when to exit a trade, and how to treat these market relationship statistics and data, including a number of other criteria. If you want to sign up, you get a 14-day free trial. In addition to that, you get access to our free trading room for 14 days. It's a live trading floor where our entire community interacts, collaborates, pitches trade ideas, and you can see every single position that I do throughout the day, including my total profit and loss. I'm open and transparent about what I do because I do it for real. This is what I do as a career. I do it full time. It's my job, and it's my job to show you real results. So this market relationships indicator, going back to it, helps you establish a relationship. And what they would look at is if bonds are strong, equities will weaken. Well, that was an interesting relationship. Why is that? If markets are weak and dropping and bonds start to come off of their highs, for example, this would give you an early indication that, hey, maybe this weakness in the equity markets is to be bought for a run higher if bonds are weakening. It works the exact same way as an indicator. We know that if an RSI indicator starts to fail, you're losing momentum, therefore the market might fall. We try to quantify this thing. We say above 80, it's overbought. Below 20, it's oversold. We know we've heard this stuff, MACD as well. But the best relationship tool, or the best indicators, are market relationships. The problem with it and why traders don't use it or haven't heard of them is, number one, they're not going to professional traders for this information. And number two, and most importantly, they're not as quantifiable. I can't tell you when this level hits, do this. But I can tell you how powerful they are, and I'm going to show you as well. Me personally, I trade ES quite a bit. I trade equity index futures. Heck, I trade anything and everything in the planet. If there's any cocoa opportunities on grains, if there's soft as pork bellies, silver futures, anything, cotton, if there's an opportunity, I'll take it. But the majority of my trades are on ES. I also trade currencies options. ES are the futures for the S&P 500 index. Also NASDAQ. There's NASDAQ futures. YM is the Dow futures contract. You can also trade oil, CL. Well, you should believe that these markets, and it shouldn't be a surprise to you, have some degree of correlation. When one goes up, other goes down. Or if one goes up, the other one will go up with it. Markets that move together are said to be positively correlated or to have a positive relationship. Markets that are moving against one another, for example, when bonds go down and equities climb, this is an inverse correlation or inverse relationship. And if they move the way they should, they're very helpful. Once they start to diverge or start to show you discrepancies in their normal characteristics and behaviors, that starts to present a trading opportunity for you as a trader and a profit opportunity as well. Let me take you into our platform and explain this to you in a little bit more depth. These numbers might hit you suddenly, they might hit you hard, but don't worry, there's an explanation for everything that you see in this info. Today, all we need to do is cover this information. What you want to do is create a chart. Now you're seeing this on my CQG terminal. This is CQG's integrated client. This is the software that I'm using. When you look at this chart, what you're seeing is the red line is my correlatory market, and the green line is always the ES. So on all these charts, the green lines are the S&P 500 futures, and the red line is the market I'm comparing it to. Well, let's have a look at the opportunity here from today's market. I want to show you a trade that I did live today based on this, and it goes to, oh, I can't move them both at the same time. There we go. It's right here. All right. So around 1:30 in the afternoon, I was on the ES and I was looking to try to pick out a bottom on this to get long, and it happened to be about 22.85 on my entry point. Well, why? NASDAQ, all right, the NASDAQ market moves in positive correlation with the S&P 500. When the S&P 500 climbs, NASDAQ climbs as well. In fact, NASDAQ leads the S&P 500. And if you didn't know that, now you know. This is information you usually don't get free or cheap, but at TRADEPRO Academy, we believe in helping you guys be successful. I don't hold things back so I can use it for myself. I believe sharing information, giving you the tools you need to make money, helps the market operate, helps everyone make money, helps us stay in this business, helps us beat the algorithms. All right, on NASDAQ, as this market climbs, it leads the S&P 500. Okay, and I'll show you what I mean by that. Here's a comparison. The red line is NASDAQ, the green line is the S&Ps. Around 1:30, S&Ps bottomed out. All right, but as time progressed, around 2 p.m., you could see the S&P 500 index was in a range. In this exact same time, NASDAQ futures were actually climbing. You see that in this exact same time period. While S&P was stagnant and going sideways, NASDAQ futures were climbing. What you tend to do, and remember I told you NASDAQ leads the ES, what you tend to look for here is a buying opportunity. Say as long as NASDAQ continues to rally, this is a great high probability, low risk time to get long the S&P 500. So what did we do? We started to get long. We started to get long about 2 to 2:30 into these dips, and you can see that S&P 500 futures ended up pulling higher into the close and starting to follow NASDAQ. What you're trying to look for here is a divergence, or one market moving the opposite direction or more strongly than another and buying the weaker market, especially if NASDAQ leads. If NASDAQ was weaker and S&P was holding this range, I would not be looking to buy the S&P. I'd be looking to sell it because it will catch down with NASDAQ. Here it caught up with it. That's our market relationships. This is super important for you to understand. Now, you might also be wondering, well, geez, what other markets do you follow? And when do you trade this stuff? Well, from about 9:30 open to 11:30 in the morning, Eastern time, Eastern Standard Time Zone, that's the overlap of the U.S. session open, and at 11:30, Europe closes. In this time period, if you're trading equities in the U.S., you want to follow NASDAQ. You also want to plot yourself a chart of YM. That's the Dow. That's this chart. And it looks the same, but it's different. And I have this posted on my screen up top that allows me to follow all these correlatory markets. I also follow gold. I also follow the yen. I follow oil. I follow T-bond futures on 30 years. But the important ones are Dow, NASDAQ. You also want to follow DAX. I can't tell you how important the DAX is to equity markets between 9:30 and 11:30 a.m. Why? That's the overlap. DAX is in Germany. It's a 30 stock index. It's the equivalent of our Dow in the United States, or of the Dow in the United States. So I'm not in the United States. All right. In the DAX, you got to follow it the same way. It's a positive correlation. Everything moves in a positive correlation with the S&P 500 futures. NASDAQ, YM, which is the Dow, DDH, which is DAX, they all move in the same direction, which means if any of them are moving stronger and the S&P 500 is failing, look to do one of two things: short the stronger market or buy the weaker market. If you want, you can do both and create a spread trade. And we cover some of this in the futures course. How to actually trade these things with an actionable step-by-step checklist plan, you can get that if you sign up for a 14-day trial. It's risk-free. You can cancel at any time. We don't bill you a penny until the 15th day. But you get an opportunity to cancel before that, obviously. It's a 14-day free trial, risk-free. All right, and you can see these strategies, you can see your checklists, and you can watch the entire lesson on market relationships and correlation. It's fascinating. I want to cover more in this video, but I want to keep it short and brief and just introduce you to the concept. That's how it works. That's leaders, laggers, market relationships, correlations, and now you're starting to trade like a professional and trade like the guys have traded in the pits for decades. Decades on end of profitable trades. If you asked me to give up all of my indicators except one, I wouldn't keep RSI, I wouldn't keep stochastics, I wouldn't keep order flow, I wouldn't keep market delta. I'd keep nothing else but market relationships. All right, because just following relationships between intermarkets and intermarket correlations is enough to keep you profitable. All the other stuff is nice to give you a slightly better edge. But this is so important. That's why you see my charts here. These are NASDAQ, price chart, correlation chart, Dow, price chart, correlation chart. Up top on my other screen, I got about 12 correlation charts cascaded like this, and I'm following these markets every single day. And they help. Look for these correlations, guys. I encourage you to put this into practice and put it into action. If you want to do it on TradingView, you could do it as well, and I'll show you how to do that. I'm going to slide over to my TradingView tab. We'll end it on this note. ES1 exclamation are the futures for S&P 500. All right, and on this chart, if I click compare up top here, and I say NASDAQ NQ1 exclamation, these are NASDAQ futures. And if I click enter, there you go. Now you have the NASDAQ for futures that are red versus S&P 500. If you're going down on a 5-minute chart, there's your correlatory opportunity as well. And here you could see this NASDAQ strength that started to kick in a little bit before the futures. Look at the rally here. It's going up and up. Futures staying sideways. And that gave you a window to ride this pop higher. All right, I hope this was helpful to you guys. I hope you found out how to use them a little bit better. If you want to get access to TradingView Pro, which allows you to split your screens, do correlations, volume profiles, if you sign up within the 30 days of your trial, you actually get 50% off. Click the link below and you can join our group and be part of the TradePro Academy group for TradingView and get access to the membership. Sign up and create an account there for free with a 30-day trial. And if you convert, you get 50% off that membership if you convert within the first 30 days of your trial. Take care and enjoy. That's for the TradingView trial. If you want to join us, click the button below, click the link below, sign up. I encourage you guys to have a look at our trading room, 14-day free trial. You'll see all my live trades, and most importantly, over this series of introducing you to 3 secret indicators, I showed you how to use them, but in the trading room, I'll show you when to use them, when they work, when they do not, how they make you money, when to cut your risk, and how to apply them in a live market setting. Don't forget this. Traders out there, especially new guys that are coming into the business, new ladies, the retail crowd, think that you're looking for a holy grail. They're looking for a certain indicator, a certain thing to help you be profitable. They think it's a white-collar job. You study hard, you analyze, and you're going to make a ton of money. All right? Hard work in this business means nothing. Analytics mean nothing. It's all about execution. This is a blue-collar job. You got to roll your sleeves, you got to get up, and you got to fight. And if you join TradePro Academy and our 14-day trial, you're going to be in a group of fighters that have been doing this for a long time. So let's fight the fight together. I'll see you guys in our membership area. If you have any questions, email me, info@TradePro Academy or Georgia TradePro Academy. Hope you've enjoyed the series, and I hope this market relationships info is really useful for you, because I can tell you it makes me good money and it keeps me away from trouble on trades that don't work. Market relationships I could not do without. That's my secret indicator number 3. Take care, guys. Have yourselves a great afternoon, great day, great morning. Email me if you have any questions, and thank you for listening in on our secret indicator series. I'll see you soon, and goodbye.